Bitcoin is holding very, very strong. And what I want to show you guys today is what these structures mean and how they can influence us to prep ourselves for a better trade opportunity, right? So last time I talked about Bitcoin, I kept saying we have pretty strong support at the 0.35 retracement at 93K because we have this area previously has been respected by 2 points. And then I kept saying that if we can't break below that, the upside to try to max out this green area is still very much possible. And there's a few things to look at now, right? Because we're moving higher, and now we're getting ready to do a smaller kind of micro level retracement before we can potentially go up higher. But everything still stays the same, right? We know, and I said this many times in previous videos. I kept saying until we have bearish confirmation, and that's going to be the price breaking below the 93K level line, which will be a new stretch for the RSI within the current structure, right? So I kept saying if we break below 93K, then that's when we want to start looking at potentially reaching this red area to have an overall proper bigger picture retracement before we can go much higher than 100K. But the thing is, as this price continues to evolve and shows strength, we still have the possibility of reaching the top of this extension area in green at roughly 102K. The reason this is very significant as well is because we've seen this many times in the past. A lot of other extension areas, we've seen this so many times where we reach the very bare minimum of these extensions, show some weakness, consolidate for a while until we eventually build enough momentum to try to max it out. So I kept saying it's very important to take advantage of these, pumps with small long positions to try to capture as much profit as you can while keeping your position size reasonable and your risk tolerance, in check, right? Because any moment, and it's very possible, I believe tomorrow there's an FOMC meeting as well. We don't know what's going to really happen or how the price is going to react to it. So here's what we got to keep an eye on, right? Is we want to keep small long positions opened and slowly taking profit as the price attempts to reach the higher premium section of this area right here. Because the moment we do break down, you don't want to have such a large position, which can decrease your portfolio value a decent amount more than you probably would prefer to if there was no other option. So I still have eyes in this red area, right? I still want to see the price have a proper retracement. Last time we had a proper retracement was back here when we had imbalance filled and this dip filled in very well the point 0.5 extension line. And what I want to see here is the price finally, because again, we haven't seen a proper retracement in a very long time. We have price continuing to go higher, but no, it's not balancing itself out. So at any point, the reason I really like this red area a lot is because it's not just factoring in the move up from the low right here, but it's also factoring in these other two imbalance areas right here. So we have one imbalance here that have not been filled yet, and they overlap very well with this red retracement area, right? So we have very strong signals right here to accumulate, and very clear, just very clear signs that hey, we're showing price strength, and we're sort of making a little bit of a higher low structure right here, and the price broke over the 120 moving average very well. It did create a smaller imbalance right here. I wouldn't be surprised if the price comes down and tries to reach 94 to 95K, potentially lowest if it wants to keep going up higher. But this is why it's so important to take, small long positions, especially while the RSI is in the lower end, as the price tries to build up strength. So if we do continue to pump, you can profit from that. But a stop loss at 93K will be, or you can even say 92K if you want to be a little bit more, conservative with it, just to give it a little bit more room. But 93K is a very important area to potentially, in my opinion, look at placing some stop losses, and potentially taking profit as we try to attempt to reach 100K before we can see a drop happen. And if the price does continue to go up higher over this week, I will follow it with this, and we will keep this area updated. But until then, what I'm personally doing is I do have small long positions to take advantage of any more potential upside, and I am slowly locking in profit as the price continues to go up higher, so I can secure those. But at the same time, I understand that, hey, I don't want to hold on to any positions and the long side if we break into this yellow area, which would be 93K and below, because this area happens and it opens up the pathway to break past this previous swing low. Many times in the past, we've seen Bitcoin use previous fib extensions as potential supports. Um, it doesn't always happen, so that's why it's so important. As you can see, it came down. We have a little bit of consolidation in this area and acted as support right here. So between 90.9K and 92K, we have potential strong support. And the 100% extension in blue, the bottom line, also overlaps basically perfectly with the 0.5 extension here in the orange yellow box. So what I'm trying to say is that as we continue to see bullish momentum building or at least strength building, we can easily max out this area. As you can see, we don't want to call a top until we finally break below 93K. 93K will break all this structure, all these supportive structures we have right here, and it will create the pathway to finally reach this red area for a proper retracement in the bigger picture. But until we have that bearish confirmation, it's very much possible the price can max this area out, because we've seen this happen so many times. Majority of the times it happens in the past, where even like right here, where we had enough momentum to reach it, just like we where is it right here, where we had enough momentum to reach it right here, and then we end up later on pushing up into the medium area of it, and we saw that happen in this structure as well before weakness happens. But during that weakness, we never really um, solidly broke any previous structures. You can see there was still somewhat of an uptrend forming. There was no structures broken to confirm a bearish trend. So since that's the case, we ended up going much higher, and the price maxed out just about pretty much perfectly at the top of this extension area. So as of right now, that's pretty much exactly how I'm looking at this structure, where we had enough momentum to reach it. We eventually reached the medium area. We show some weakness, but the weakness never breaks any supportive structures. As you can see, it's right here at 93K, where the supportive structures really begin. We can't break below it. Instead, we pump up higher. So I wouldn't be surprised if we see something very similar to the other structure I just showed you, and we eventually try to go into the premium area, maybe max out this green. So that's just why, in my opinion, it's so important to, you know, be open minded with having small long positions with a tight stop loss to take advantage of any more potential upside. And then you won't be hurt much if we do finally break down. Um, I believe it's most likely than not that we will eventually reach this red area, but that's why it's so important, so you won't be hurt as much whenever we do go into this area, and then you have cash sitting ready to go because you had a stop loss, so you have cash sitting there ready to go to accumulate longs at a sub 90K level. Ideally, low 80s will be awesome, because that's where we have a lot of other supportive structures right here. As you can see, consolidation tends to act as a magnet in the future. Doesn't always, but it tends to. And that's how I'm approaching this personally. In this area right here, where we have consolidation, overlaps with the discounted area in red, between the 0.618 at 83.3K and the 0.5 at 86.1.5K. So basically, that's how I'm looking at this. Is I want to make sure that I'm not holding on to any losing positions much. Again, I plan to not have any longs below 93K, so I can have money sitting ready to go to accumulate longs within this red before we finally start pumping up much, much higher. But again, I do have small long positions opened up still, because again, until we have that bearish confirmation, it's very much possible, and we've seen this happen many, many times, where we can easily max out a green area, and just trying to lock in as much profit and just ride the waves as much as I can. And right now, with this recent pump we had today, very aggressive pump as well, RSI is maxed out, so I may be wanting to kind of retrace a little bit. So what we're looking at right now, in order to see if we're going to continue to go up higher, or maybe retest the 93K level and see if it's going to hold or not, we have imbalance right here, tends to act as a magnet, and then we have. So I'm going to go ahead and highlight that, actually, if I can find the right tool. So we have an area right here, which I believe is very important to keep an eye on. So this area can be a good supportive area. It doesn't just highlight the imbalance, but it also highlights the the 120 moving average right here as well, perfectly just about in the middle of it. So as the price weakens and tries to find support to maybe go up higher, we can also see if the price reaches this box, if the RSI starts to bottom out a lot. If it starts to bottom out a lot within this area, it's possible that maybe you can see a little bit of a pump continuing, um, and then see if the pump can break past these two resistance lines that we have right here. So basically, that's how I'm approaching this. I'm taking small long positions, but I do have an area where my stop losses are. I don't want to hold any longs below this area, so then I can be able to accumulate much more within this area down here, and that's basically how I'm approaching this, right? So I'm looking at maxing out as much profit as I can within this area, like responsibly, and then I'm looking at buying aggressive longs eventually when we reach the proper retracement area for the overall bigger structure. So hopefully this video made sense, guys, and I'll catch you guys in the next one.